Hi, I'm Giles Arbour from Directors Talk, and joining me today I have Andy Hanson, the Director of Equity Research at Zeus Capital. Andy, nice to talk to you again.
Yeah, good morning, Giles.
Now, Headlam Group announced a trading statement this morning. Andy, what did it say?
Well, we've got a trading statement for the 10 months of the year to the end of October. Obviously, 2 months or 2 months additional trading beyond that. But the 10 months trading statement was very strong. You know, I mean, the company's had a strong first half of the year, and it was up to the 4.8% at the interim stage. And they were saying at the end of October, trading was up sort of 5.2%. So a good performance with the second half improving.
Okay. Now, we've heard from other retail-focused businesses that trading's been difficult post the referendum. Has this impacted Headlam?
Well, interestingly, like I said at the interim stage, the business was tracking ahead of expectations slightly. But I kept my forecasts where they were with the expectation that the market would slow to a degree. And certainly, other businesses at the time were suggesting that there would be a slowdown. And we've heard from the likes of Tile saying they have been impacted by consumer slowdown. But Headlam really hasn't been impacted, which is slightly surprising, but it's also really, really good performance.
Brilliant. Now, you've upgraded your numbers this morning. What's driven this?
Well, effectively, two things have driven this. As I say, I had expected a bit of a slowdown in the second half, but this hasn't come through. The volumes have stayed as expected. It has been beneficial. And this has been helped by price increases that the business put through in July, August time. These were put in to offset the cost price increases the business was seeing, particularly relating to currency, because 60% of effectively their cost of goods sold, what they buy, is bought on the continent. So the weakness of sterling has increased this, so they put through this 6% increase then. The net effect has been a 3.5% price increase. So the good volumes combined with this price increase has driven top line growth above what we had been expecting. So I've actually upgraded my full year 16 numbers about 2% on the top line and about 4% at the profit line. And just rolled that through into my 17-18 numbers, so you get a 2% top line and a 4% upgrade to profitability across the forecast period.
Sure. So what are your thoughts on full year 17?
Well, the outlook's still slightly mixed. UK consumer will be important for Headlam next year, and with GDP growth forecasts looking set to slow, there are still headwinds for the business and cost pressure still to come through. The one thing I would say about Headlam is it has great pricing power, because the average spend on a carpet is fairly small, say £200. A 5% price increase doesn't have that much impact. So I would expect them to offset the cost pressures as they have done in full year 16 and full year 17. The unknown at the moment is the impact on the consumer. Offsetting any sort of top line weakness from the UK consumer, the business does have some operational levers that it can pull, which should improve margins slightly. So whilst I'm aware that full year 17 could prove difficult, my forecasts are conservative. I'm only assuming 1% top line growth, and I did 5% in 16 and 3% in 15. So I'm still quite confident the business will make a step forward in terms of profitability in full year 17.
Okay, great news. Now, in full year 15, Headlam paid a special dividend. Was this a one-off, or should we expect further returns of capital?
We should certainly expect more special dividends going forward. Management have been quite clear that they're saying they will return capital to investors. The basic current yield at the moment is still sort of 4.5%. You're getting a decent yield, but that's likely to be topped up by these special dividends. The one thing I would say is they've got quite a big capex investments in full year 17, which relates to a distribution centre in in Ipswich. So maybe not in 17, but certainly in 18, I would hope to get further special dividends.
Excellent. Okay. Talking to us today was Andy Hanson, the Director of Equity Research at Zeus Capital. Andy, thanks for speaking with Directors Talk today.
No problem. Thanks, Giles.